Good morning, everyone, and welcome to the European crossover webinar. And we have seen indices rebound a bit from the sell-off that we saw late yesterday. Actually, the sell-off could continue to just cascade a little bit lower later on in the U.S. session. Taking a look at where we stand here with FX. Looks like we have moved into the summer doldrums. Yesterday, we traded in basically a 50 pip range, and we're even quieter today. So it looks like the dog days of summer are really, when we get into the first week of August, you see a lot of Europeans go on holiday. It looks like we're seeing just that. Wow, it looks like the euro is trading in about a 18 pip trading range. Cable, not much more of a wider range than that, although we are back above 139. And the Aussie has moved a little bit higher. We did see a bit of a rebound here yesterday, and it's continued to move higher. Once again, that weekly level of 74.27 is where the rubber meets the road. And then looking at the dollar yen, we did see a pretty decent sell-off yesterday. We came into our bias support at 921. That held the market, but we're testing it a little bit lower today. You can see just slightly lower, but the range is relatively tight. And then onto the cash dollar index, we were in a pretty tight range yesterday, although we closed a little bit lower and exceptionally tight right now. Looks like we're looking at a range about, holy smokes, we're looking at about less than a 10 tick range in that cash dollar index. Take a look at what we've got on the economic calendar. Well, we do have a French 10-year auction at the top of this next hour, along with a Spanish 10-year auction. And at the top of this next hour, we do get Eurozone PPI. Forecast is for a positive 1.4%. And as we come into the States, we do get manufacturing PMI out of Canada. That'll be at 9:30 Eastern, along with durable goods out of the States coming in at 10 a.m. Eastern, as well as factory orders. And we do have a 30-year bond auction later today. Oh, it says it's tentative, so I don't know what that means, but it's going to be tentative. I mean, obviously I know what tentative means, but why would it be tentative? I'm not sure. I guess the time it means, I guess, is tentatively at 11:30 Eastern. FOMC speaker Clarita will be speaking. We do get some crude oil data. That'll be weekly crude oil stock, but that's after the cash close in equities. So a little bit of data as we come into the States. As I said, we saw this pretty decent little sell-off here in NASDAQ. And you can see here the daily here was a Gravestone Doji. Now, we had a couple of things at the beginning of the week. One of the things I thought about since last week was that the market was suspect for a pullback because we'd gotten past the big earnings picture, and that what would be the catalyst for us to move higher? Now, as we came into the week on Sunday, we talked about those headlines showing because of all the COVID vaccinations, it was pushing people from the sidelines to come in back into the picture, because we're also seeing rising wages. That starts off on a very positive spin, but we're seeing when the fly in the ointment is we're really seeing this Delta variant, a lot of cases really popping up, especially in the South with these unvaccinated people. And Florida set a new record that even took out the hospitalization record from last year. At the height of the COVID situation, they're actually dealing with 4 types of variants. So that's got to weigh on sentiment. And we're seeing the same thing in Louisiana and some other states. So I think that has a potential to weigh on this. We saw bond prices. I shared that on the in the chat. We saw bond prices take off, interest rates falling, and at that point, then we saw the euro, not the euro, but the NASDAQ was traded at about 15,035 ish, maybe around almost 40. And then all of a sudden, we saw this thing really start to come under some pressure as it sold off. It came back, but then we still struggled to put much back on it, and we rolled back further. And at the end of the day, we were pressing lower, and then we came back a little bit here. We're holding. Now we do have NFP at the end of the week. That's considered to be constructive. Positively speaking, they're looking for a good number. But with this whole COVID strain coming out, that's probably going to make this market susceptible. So I think that there's a possibility we'll press back down in here ahead of that, although we may kind of keep a constructive tone as we go into that report. But at this point, probably have a lot of people thinking, you know what, this is really a good time for me to start to cash out of this stuff. Now, we did have mutual fund Monday, but whether how much this holds up, I think we're gonna have to come back down here to test. I think we'll be going beyond this 14,923 to test. I'd be looking probably about just for starters. We can look at the profile, but I would think down here, 14,875. We hit some stops, should get us around to 14,875. We'll take a look at the daily. And here's the 20-day simple moving average. You can see how that market is. How this the market is held up against this. That takes us to 14,867. So that kind of plays into what I'm looking at. Potentially is down here, which is 14,876. So that's only by 10 handles. We'll take a look at the profile later. Take a look at the S&Ps. To a certain extent, they've held up a little bit better than the NASDAQ, but certainly they're open to testing. We came back down towards this 43.68. Thought we might have been able to take that out, but that really leaves this market a bit suspect. And same thing here. We may end up pushing lower. We'll have to see how this plays out also on the daily. That 43.76 is really key here. You can see that. And then the next key battle would be right there, 43.59. We break that, and that's going to be, it's going to change sentiment. Let's put this right here. That's 43.59. We'll mark that off. So we're going to take a look at the analysis, but I can assure you that we just don't have any changes at all in FX. Everything's pretty much the same across the board. We'll go over that, but there's not really any changes. Starting off with the euro. The euro remains tethered to a 50 pip trading range on a daily basis. You can see here, basically 50 here, 50 there, 50 there over the last 3 days. Resistance remains 1924/39. Was supported 1824, no changes. So you can see here, no change across here. We're just into the that period where a lot of Europeans go on holiday, and we just don't see movement. Let's go and move on to the cable. Cable closed lower to start the week while being relegated to a tight range. Look how tight that was here. Support for Tuesday will remain 38.59 with resistance at 39.47. And you can see here, we're basically going nowhere quickly. On to the Aussie dollar. So the Aussie traded slightly higher in a tight range, just like the other dollar pairs. Support remains 73.20, followed by 72.87, with resistance at the weekly level of 74.27. So we're just still marking time here. We did get down to, we'll take a look at it because I had said, we know we had 73.20 yesterday, and the low yesterday was 73.28. So it's not bad here. The only thing is I revise this now. It's already got down there to include that 72.87 if we break lower. Resistance is still going to remain that key weekly level of 74.27. Now, as we move into the cash dollar index, the dollar index closed flat for the day in a limited range. Support remains at 91.47 with resistance at 92.48, 92.40. No change. So you can see we're not going anywhere here. With that, we'll just go on and quickly move into the Bitcoin. And you can remember here with Bitcoin, we had 41,311, and it seemed like, wow, that's just a little bit too high. And I'll be doggone if we didn't finally get there. We got to, I think it was at 41,620, and then we saw this market pair back, and look to the extent it paired back. So bias chart levels have been pretty good so far overall with this thing. Remember, our low here missed the bottom by only $99. And when it did miss the low just by $99, the market by the next 24 hours was up $1,200 from that low. So the levels have been pretty kind on this Bitcoin. Bitcoin posted a bearish engulfing bar on Monday, closing below 39,000. Support for Tuesday will be 37,600. That's right in here. With resistance at 39,563, which was previously support, which is now resistance. So let's update this to 37,600. You can see here that was support yesterday. Now that is now resistance. And what we always do is we look at the action, as you probably know by now. The action here on when we're doing the webinar for the bias chart, as you can see now, our support and resistance levels are for the next 24 to maybe 36 hours. So I'm not here to go and say, oh, I think we're going here. Oh, Bitcoin, we fell here. We're going down to 32,000. No, I'm not looking for that. We look at the levels over the course of the next 24 to 36 hours. Sometimes, as I said, when we're talking about the pairs, when they were moving lower at the time, euro, specifically remember Aussie dollar, and I said, look, I'm not going to go from level to level. I mean, 10 pips here, 25 pips there. We're going to 72.87, and that's it. And remember, the market bottomed at 72.89. But the gist of the webinar, when we look out, is for short-term trading that you can incorporate this into your own analysis for levels that we're looking at. So once again, we've done really well with the levels on Bitcoin, but we're not here to say, oh, we're thinking it's going here, we think it's going there. We do have a bias, but nonetheless, and the levels have been very well, but they look on a very short-term outlook. That's the focus of this bias chart. So you can kind of fine-tune, use this to incorporate and fine-tune where your levels may be, and say, okay, I have a stronger conviction towards that. And that's essentially how we use the bias chart here on the webinar, which is more focused on a day trading look for these resistance and support. So with that, we'll go and move into the S&Ps. So S&P futures turned lower on Monday after the cash open, pushing lower throughout the session before finally supported 43.77. I think our support was 43.81. I thought it was. No, it was actually, I think we had 81 when we originally started the day, and then I said, well, we did the bias chart yesterday. I said, well, that seems a little bit too low. Let's go with 88. But so it went down to 43.77. The market bounced, rallying back to the low 43.90s. Resistance for Tuesday will be 43.98 with support at 43.80. So let's go get this. And once again, like I said, when you look at this daily, it looks a bit suspect. The market looks susceptible, a little bit tired. I mean, like I said, I don't follow RSI, stochastics, but you don't have to follow that to see that the market is really kind of, I wouldn't say struggling, but you're getting to a point where now it's really having a tough time getting some solid footing, some solid traction, kind of, pulling back. We're up a little bit, then we pull back. So it's suspect to fall. Now, we may stay positive or into the NFP, which is supposed to be quite positive, but nonetheless, I just don't see what the catalyst is going to be. Now, with earnings, you still have other companies. NASDAQ was a bigger mover, and a lot of the NASDAQ stocks play a big role in the S&Ps, but now you've gotten past those key stocks, those key drivers in NASDAQ, Apple, Microsoft, Netflix, Google, Facebook. Where's the impetus now going to be? And now with this Delta variant really taking a strong hold, despite the way we started out at the beginning of the week with some very positive headlines, which would lead us into a strong move into the NFP. Now those have come out very, very strong, like you said, with Florida setting records, dealing with 4 different variants. Louisiana is in really bad shape. And so how much will this continue, will go away? And at this level, and without much of a catalyst to move higher, it makes this market suspect to a pullback. I think that that's possibly where we could be. So keep an eye on that, and we could end up seeing the same kind of rollover, and you might gather some steam. With that, let's go and move into the NASDAQ. So the NASDAQ, you can see right here, straight up gravestone doji right here. And in a sense, this has been a better feel than the S&Ps as far as you can see here, been pretty much more 3-to-1 as far as positive closes here. But we are rather stretched here. as I said, what's going to be the catalyst to get us to move higher? I'm not saying that the market's going to try and fall apart here, but I don't think it would take much for us to be right back down and probably take out the lows here at 14,811, maybe somewhere dip. I would say potentially, if you look on a daily, potentially what we may do is come down here, and 14,811 was the last one, last key level here. I think potentially we can come down here and take out this low, which is 14,774, and see what stops to take out there. So let's go. There we go. And let's go in. That's what I'd be looking for to make a move there. Test the stops there. And that'll be 14,777. On the upside, resistance for right now is going to be 15,011. And support right now is going to be 14,923. I think we could press a little bit lower than that. We'll get into the profile. You see where they found that support at 14,936 yesterday. Yeah, 14,902. 14,902. Let's go with this 14,905. See that close there? That is 14,909. So let's go with that, 14,909. And taking a look at gold. Gold closed lower on Monday in a very tight session. Support for Tuesday will be 1802 with resistance at 1824. And moving on to crude, we saw a pretty good sell-off. So crude broke solidly lower on Monday, closing below $72. Support on Tuesday will be 70.36. And that comes from down here. You can see this ridge right there. That's from coming over 70.36. With resistance at 71.91. See this ridge right there? That's 71.91. That's what I'm coming with that. We can take a look at the profile quickly. The midpoint yesterday was 71.96. 72.18 is the value area low. Value area high. We'll go with that 72.18. So there we have it. There's the bias chart. And I didn't touch the dollar yen. That we didn't. Hold on. No wonder, because I was wondering why that was still showing that. Let's go to the dollar yen. So the dollar yen paired back 50 pips, finding support at bias chart level of 921. You can see that. There was our bias chart support. Support for Tuesday will be 895 with resistance at 970. And there's the bias chart. And I'll get that posted in the room. And thanks for joining us here on the European Crossover webinar.